Welcome back. We're going to take a few minutes to dive into the wonderful world of tax audits. Most of the time we get this letter in the mail from the IRS or from the local taxing authority, Department of Revenue, and the pit of our stomach just begins to churn because at that point an audit is coming. So what happens if you get audited? We're going to start with the why. Accuracy matters, and audits are usually triggered by a computer algorithm. Sometimes there'll be a situation where you'll have filed your federal taxes and someone will have submitted a 1099. You've forgotten to include the 1099 in your filing. And so the total number of sales associated with your business that the IRS may have and what you reported on your tax return may differ, and that may trigger the audit. The other way audits tend to be triggered from an accuracy perspective is if your math doesn't add up, if you're missing a file, or you're missing a schedule, or you're missing a piece of supporting documentation. The computer will identify that something's missing and then kick that return out for further review. Sometimes you can end up getting audited because someone else got audited. So an audit was conducted at a different company. They noticed that they had paid you $10,000, had not issued a 1099, or they noticed that you had paid them $10,000 and had not issued a 1099 and should have. So they go, oh, that's sloppy. We're going to initiate an audit on them. Or it's a sales tax audit, and they notice that you didn't withhold sales tax. Your customer had to pay use tax, but now they said, oh, we've got someone who's got nexus in this jurisdiction. They're selling into this jurisdiction. They should have withheld sales tax and didn't. We're going to initiate an audit on them because they may have other clients or other customers in the same jurisdiction in which they didn't withhold sales tax, and that gives us an opportunity to go collect some more revenue. So accuracy matters. The computers will tend to pick these things up as part of their audit review or as part of their review of your filings and kick out returns to get further scrutiny, and depending on what the human finds, you may end up finding yourself in the midst of an audit. Most audits are correspondence audits. They send you a letter, they say this doesn't match, please send us supporting documentation as to why your number's right, or please pay this amount. It goes back and forth by correspondence, by phone, email, and mail, and it resolves out without you ever seeing the auditor. However, more broad-based audits are field audits where they're going to come to your office, they're going to want to take a look around, they may even want to count your inventory, they're going to want to look at your records. That's a field audit. Field audits are far less common because they cost a lot of money to conduct, but if they think like there's going to be a potentially deep pocket or significant recovery associated with the audit, you'll find a field audit. The IRS and other taxing authorities, as I've mentioned, target businesses that show consistent losses. They target businesses and individuals that have high passive income, so a lot of dividend income and a lot of interest income, rental income, and where, as I mentioned in the first section, they have identified inaccuracies in the filing. When you get a notice from the IRS or from the state, don't ignore it. The IRS is your worst creditor. You can't make tax liability go away. Even bankruptcy doesn't make tax liability go away in most cases. So don't ignore an IRS or state notice. They'll start to proceed with their collections process and attach your property and do all sorts of bad things. Where a business or some other person who's trying to collect from you might just go away because they don't think you have the ability to pay or it's just not worth their while, the IRS and state don't do that. So don't ignore an IRS or state tax notice. The other thing is don't panic. Get your lawyer or CPA involved or an enrolled agent, an EA involved if you're unsure what you're dealing with. So you get a notice, and I have one here from a or for a client, and they got a notice, IRS notice, and they're not sure what it's for. So they contact me and ask me to please take a look at the tax notice and return that information back to them along with what should they do. If you don't know what the tax notice is for, don't just toss it away. Don't just toss it to the side. Get somebody involved who can understand what the IRS, which is that case, or the state or local municipality is looking for, and respond. When you get a notice from the IRS that says notice of intent to levy, you're way late. That means that they've already gone through a couple notices to you that, or your business, that have been ignored. And the IRS is moving to seize your assets. At that point, you need to get an attorney involved and get them involved fast, because you're going to need to jump in front of that moving train in order to get it stopped. We tend to see these when one of the employees has been getting the IRS notices and they go, oh crap, I probably made a mistake, I don't want my boss to know, and they shove the notice away and hope it disappears. It never does. But then the intent to levy shows up and your business is in a world of hurt. So if you see notice of intent to levy come in from the IRS, get your attorney involved fast, try and jump in front of that moving train, get it stopped, and figure out what the situation is. Often you're going to be able to work your way through it with a sympathetic auditor, but the only way to do that is to move quickly, decisively, and transparently with your auditor. During the audit, your attitude really matters. So be cooperative, but not effusive. Don't volunteer a bunch of information. Answer the questions. Answer the questions directly. Cooperate, because attitude really does matter, and the auditor really is a person. There's some good auditors out there. There's some bad auditors out there. But your attitude is one of the things you can control. So be cooperative, but not effusive. Be businesslike, not belligerent. You might be upset. The auditor might be a jerk. It doesn't really matter. Your attitude matters. It's the only thing you can control. So be businesslike when you're dealing with the auditor. It's going to go a long way to resolution successfully of the audit. At the end of the day, whether it's a state or the federal government, they generally have an audit manual that they have to follow. They have a set of policies and procedures that they need to check the box on in order to get the audit through their boss and review. So there's not as much flexibility as you might think around how they conduct the audit, but there are times when a tie goes to the person who is more cooperative or more businesslike. When you're moving through an audit, keep moving, but take your time and think. Don't panic. Don't immediately jump to an answer. Don't volunteer anything. Take time, think about your answer, think about any information that might be useful to your case around the outside of immediately what they're asking for. You might be getting questioned around travel and you want to answer that question right away. You may want to take a step back and think about, okay, what was the purpose for that travel? Do I have any other backup documentation or emails which might show the business necessity of that travel and what I did there, before you just dump everything onto the auditor or go, I don't have something. Which leads us to keeping well-organized records. If your records aren't well organized, if they're just a box of stuff, you're going to want to organize those records and make sure they look well organized, and they are well organized when you turn them over to the auditor. You're normally not going to have the auditor show up at your door unannounced and say, give me everything. You're going to have time to go through the process of organizing your books and records before you turn them over. You may not have a lot of time, and so doing this along the way is going to be a far better answer than just handing a box of records to someone and going, oh my gosh, here's everything I've got, go find what you're looking for. The auditor's not going to bother to do that, or they're going to find things you don't want them to find. So have well-organized records, have a process in place to keep them well-organized as you're going along the way before the audit. But if you didn't, take the time. I don't want to say drop everything, but darn close to that. Take the time, organize the records before you turn them over to the auditor. That's going to go a long way to making them go, okay, they're well organized, therefore they may not have made a mistake. Or, again, tie goes to the runner. You might end up in a situation where they go, well, it's close, I'm going to let them have it because it looks like they've got their stuff put together well. Anticipate where the auditor is going to have questions and be prepared. You may have taken some aggressive deductions. You may have an aggressive position. You may recognize that auditor's from Tennessee, and you've got a couple customers in Tennessee that are likely the subject of the audit. Be prepared to answer those audits. Anticipate where your risk positions are, and be ready to support those positions. And if you're not ready to support those positions, at least don't be surprised when they're talking to you. If you are caught unprepared and surprised, let the auditor know that you're going to pull the information together that they're asking for, or that you need to look into it further, and then actually do it. Investigate the question, get back to them. Let them know you'll get back to them. Actually get back to them. You'll be surprised how many people say, I'll get back to you. They never get back to the auditor. The auditor goes, they're a jerk, goes back to attitude matters and treating the auditor like a person, and pretty soon tie doesn't go to the runner anymore. So get back to them. Don't guess. Sometimes the auditor already knows the answer, and they're seeing what your response is going to be. Don't guess. If you don't know the answer, find out the answer, and then give them the correct answer. And finally, you have rights. There's an IRS taxpayer bill of rights. They can't harass you. You have the right to recover damages from the IRS if they conduct their audit wrong and go outside the parameters of their audit manual. You're entitled to counsel. That counsel can be an enrolled agent, could be an attorney, or a certified public accountant. You can get reimbursement for your attorney's fees if the IRS loses. And if the IRS had a frivolous case, you have damages. So you've got an opportunity to defend yourself, and the IRS Taxpayer Bill of Rights, which was passed by Congress, protects you. There's also an ombudsman at the IRS to help you answer your questions. So if you want to try and handle this alone, and again, depending on what stage you're at in the audit process, you may think it's a good idea to do so, then you can contact the ombudsman and they'll help you answer your questions or direct you where you need to go. If the IRS goes and finds that you have an issue, you can appeal that finding to tax court or to the U.S. District Court and litigate against the IRS for resolution. So if they made a mistake, the audit isn't the final appeal. You've got an administrative appeal within the audit process, and then you can go to tax court or district court. And all along the way, from the moment that that letter shows up until the audit is done, you have the right to representation, the right to an enrolled agent, a CPA, or an attorney to represent you. An enrolled agent is a specialty certification that is issued by the Department of the Treasury that shows a level of competence associated with tax matters and allows that person to practice before the IRS in the representation of taxpayers during an audit. So any one of those three will have representation rights before the IRS, and you can engage them at any time. Again, the most important thing on an audit is don't panic and be organized. If you end up in an audit situation, my best advice is go back to your tax preparer, whoever your primary tax preparer is, advise them that there's an audit underway or that you've been notified of the audit, and then work with them to come up with a plan for audit response. As long as you're ping-ponging back and forth with whoever the auditing agency is on audit response, you're generally going to come out, well, you may not come out great on the financial side, you're generally going to come out fairly well as best you can. If you've got a mistake and there's an issue, you can work with your advisor and the auditor to get that resolved. So if you legitimately owe tax in Tennessee because you have customers there, you can work with them to get penalties abated or waived as part of the process because you've been cooperative and were unaware that you had exposure. So again, be cooperative, be well organized, and use representation if it makes sense to do so. You have the right to it, and you have rights with the IRS